Hey everyone, and welcome back to The Explainer. So, if you're joining us today, you're probably looking to get a really clear, data-driven look at exactly what is going on in the global diamond trade right now. We're going to take a top-down journey into the July 2026 global diamond market, and to do that, we'll be leaning on the latest data from the Rapaport Trade Diamond Index. We're going to break down the hard numbers, take a tour of global hub activity, and actually, we're going to uncover some really fascinating shifts in what consumers are literally choosing to wear.
Now, right out of the gate, we have to ask the multi-billion-dollar question that's just hovering over the entire industry right now. Is the natural diamond market losing its sparkle, or is it just changing its shape? I mean, when you look at the raw commodity pricing, it is so easy to just assume the market is in a slump. But as we'll see today, that's really only half the story. The natural diamond market isn't necessarily losing its sparkle. It's more like the very definition of what we consider valuable is undergoing this massive transformation. Okay, let's dive into this. Here's our roadmap for today. First up, we'll look at the Global Diamond Index. Then, we'll go touring the trading hubs. And finally, we'll see why fancy shapes command premiums.
Section 1. The Global Diamond Index. Macro Reality Check.
Now, what's really interesting about this slide is the 3-month performance of the 1-carat Rapaport Trade Diamond Index. You can see an absolutely undeniable downward trajectory here, from late April right into late July 2026. Yeah, sure, there were a few minor, momentary corrections along the way, but the overall momentum for the benchmark 1-carat commercial stone, it's been undeniably negative, dropping near its lowest point on the chart by late July.
And it gets even more interesting when we break that index down by carat weight. We're looking at a huge dichotomy here. If you check out the weekly and monthly columns for the smaller stones, so the 0.30 and 0.50 carat categories, we're actually seeing a bit of a short-term recovery. There's a 4.25% monthly bump in that 0.30 carat size. But cast your eyes all the way over to that far right column, the year-over-year data. This is where the stark reality really hits. We are seeing massive, double-digit drops across the board for anything a carat or under. I mean, half-carat stones plummeted over 23% from where they were exactly 1 year ago.
And look, this immense pressure on pricing has profound implications for the absolute giants of the industry. Take De Beers, for example. In the second quarter alone, they took a staggering 44% year-over-year drop in sales. That brings their Q2 total down to just $665 million. Because of this massive contraction, De Beers is actually staring down an estimated loss for the entire first half of the year. Unbelievable, right?
So naturally, this turbulent pricing environment is sending shockwaves across the broader corporate landscape. At the very top, Anglo American has reportedly tapped a consortium led by Gareth Penny as the top bidder for De Beers. Meanwhile, things are shifting in international trade too. The U.S. just slapped fresh 25% tariffs on Brazilian goods and a massive 50% tariff on Canadian goods. Now, how exactly these policies will impact diamonds and gemstones, that's still a bit unclear, but it absolutely adds a thick layer of uncertainty to the global supply chain. We also saw prices actually bump up for small, low-quality rough at the Okavango auction. And, it's not entirely doom and gloom everywhere. Swatch Group reported a 2% uptick in first-half jewelry and watch sales, hitting $3.6 billion. And major Asian retailers like Luke Fook and Chow Sung Sung actually reported sales growth in their recent April to June quarters. So it's a really mixed bag at the top. Let's zoom in a bit and see how these big numbers are playing out for the dealers on the ground.
Section 2. Touring the trading hubs. A global snapshot.
What the data here reveals is essentially a tale of two entirely different worlds, heavily dictated by seasonality and local momentum. On one side, traditional hubs like Belgium and Israel are caught in this deep summer slumber. Activity is super quiet right now because of extended summer vacations. In Antwerp, there's even a real shortage of goods, which is literally forcing buyers to look elsewhere. But then, on the flip side, you have the Asian trading hubs, specifically Hong Kong and India, and they are bustling, full of activity, highly positive sentiment, and really active buyers. Just to put that slowdown in the quieter hubs into perspective, take a look at this number coming out of Israel. In the first half of the year, their rough diamond imports plummeted by a massive 36%. That brings them down to just over $208 million. And alongside that, their polished exports dropped by 22%. It's a really stark reality that perfectly captures just how quiet the market has become in that specific region.
But jump over to India, and wow, the story completely flips. The sentiment on the ground there is incredibly positive. Why? Well, those strategic supply cuts have actually worked to stabilize their market, and it's building up real confidence in natural diamonds. The U.S. is still their most reliable export partner, which keeps demand nice and steady. But maybe the most crucial point here, and this is a big deal, is a direct shift in consumer behavior. Buyers are actually starting to pivot away from synthetics and returning to 1-carat SI Clarity natural diamonds. That specific demand, along with the massive anticipation for the big August IIJS jewelry show and the upcoming Diwali season, is just fueling immense local optimism.
Hong Kong is another spot completely defying the global slump. Trading there is actually beating last year's metrics. But here's the catch. It's not the everyday commercial goods driving this, it's the high-end stuff. Hong Kong is thriving off of demand from Chinese tourists and really serious investment buyers. They're hunting for very specific top-tier items. We're talking 3 to 5 carat D to F color, flawless to VVS1 and VS1 goods. They want pure, premium quality that holds immediate resale value. And you know, this intense focus on specific, sought-after goods is actually the perfect transition into our final section. Let's move from the global hubs down to the micro level and see what everyday consumers are desperately hunting for right now.
Section 3. Fancy shapes command premiums, shifting consumer tastes.
To really grasp this shift, we need to talk about long, fancy shapes. We're talking about diamond cuts with elongated proportions, specifically ovals, marquise, and emerald cuts. Right now, in sizes of 2 carats and up, these elongated shapes are just drastically outperforming your standard round diamonds.
In fact, the demand for these unique profiles is so fierce, it has literally upended traditional pricing hierarchies. According to the July index, the marquise cut is currently the most expensive fancy shape on the market. This is being driven by a severe shortage of perfectly proportioned goods. I mean, a poorly proportioned fancy shape, good luck, it's practically unsellable right now. But a perfectly cut marquise, incredibly rare, and therefore it commands absolutely top dollar.
To show you just how much proportions matter in today's market, look at this. A long cushion cut is so highly desired right now that it easily commands a 20 to 25% price premium over a standard square cushion cut of the exact same weight and quality. Just think about that for a second. The physical weight is identical, but simply having that elongated shape instantly boosts the stone's market value by a quarter. It's wild.
Now, this obsession with shape is heavily driven by consumer trends in the United States. The U.S. market is showing rock-solid demand for elongated ovals, specifically in those D to I colors and VS to SI clarities. But there's also this massive wave of nostalgia hitting the jewelry counters. Antique cuts and styles, like old European and old mine cuts that were super popular over a century ago, are incredibly hot right now. Retail jewelers are aggressively sourcing these unique, character-rich shapes just to satisfy clients who want something completely different from the norm. Oh, and interestingly, some dealers are even speculating that the sharp, square princess cut might be gearing up for a major comeback, so keep an eye on that.
And this brilliantly illustrates the central theme of the current diamond trade. We are looking at a heavily polarized market. On one side, you've got the weak commercial round diamonds, especially those under a carat, and they're actively struggling, losing serious ground to synthetic competition. But on the exact opposite side, you have these hot, fancy, and antique cuts, shapes with distinct character and precise elongated proportions, and they're in incredibly high demand and commanding massive price premiums.
So what does this all mean? It leaves us with this final thought to ponder. We've seen the macro index drop, we've watched trading hubs adapt, and we've uncovered a massive surge in demand for non-traditional shapes. As consumer tastes definitively reshape the global market, we have to ask, is the true value of a natural diamond now found in its uniqueness and character rather than its adherence to tradition? It's a totally fascinating evolution for one of the world's oldest commodities. Thank you so much for joining me for this explainer, and as always, keep learning.